All right, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. Hope everybody's having a great session. Let's talk about a few. Let's talk about a few things here. Let's start off with the euro dollar. Arabadina in our chat room is out of New Jersey. Actually, he'd mentioned this trend line, which I think we should, obviously be aware of with the euro. If you take the euro from the 2008 high, right? And he made a good point. He's like, this is going to be a tough resistance to get through, and I have to agree. Let me reset this really quick. That trend line, it depends on how you view it. I mean, you could go to, this is a weekly chart, by the way. You can go to the peak of 2014, roughly, right? That takes us right to 118. You guys watching that? Can you guys see that chart? By the way, the weekly euro chart, can you guys see it? Just type yes in the chat if you can. I just want to make sure everybody's seeing this. Yeah, okay, you guys can. Okay, good. Okay, just want to make sure. All right, so there a couple ways to look at it, and like I said, I think we need to view them both ways. So if you go to the very peak of 2014, that trend line would actually come in where the flag target is. Comes in at 118. Let's just say roughly 118. Okay. Now, what he's probably talking about, and what I tend to agree. So when I'm looking at a trend line, what I try to do is I try to find as many points of contact as possible. And if I can find, the more points of contact, the better it's going to be. So if I'm looking at the euro and I'm trying to find multiple points of contact, I'm going to drop that trend line down just a bit to this. So where you got, right there, a couple months before then, in March, this high right here in 2018, and then that should take us right to here about 116. By the time we get there, 116.30 roughly. So how's the market going to view it? I don't know, but I think a good practice is going to be, when you have euro longs, you got to be a little careful from here to here. So probably like 116 and change to 118 and change. It's going to get a little bit more challenging to make money on the downside of the dollar as we, are approaching those levels. Where I think we're going to see more of the struggle, if you ask me, is going to be in other dollar pairs. But the euro, we have to be obviously pretty aware of as we get close to it. So I think that was a great observation by Arabinda in our chat room. All right. So that's one. I want to talk about that. So for me, what I'm looking to do is add to euro longs, but I'd like to add to them like right around here. If I can get them around the 1540 to 1520s, somewhere down here. I've got some bids in right now to add to euro longs. That's what I want to do. Cable, proved to be a good pickup overnight. I picked it up down here and I sold it actually right where we're at on the face webinar earlier today. I sold it at 26. So I captured the bounce. I do want to try to buy it again. I am interested in buying the pound back down here, right through here, if I can, back in the 70s or 80s. If we dip back below 127, okay, that's what I'm looking for. The Aussie. Now, the Aussie, I think, is facing really key resistance. Steve pointed out this trend line on the webinar earlier today. I wasn't really paying much attention to it. I was paying more attention to the 618 retracement on a weekly basis, and that comes in basically at 61.50. That's what provoked me to actually go long the Euro Aussie. So let me reiterate why I'm adding to my Euro Aussie longs. There was an article that I posted in the chat room. It was Bloomberg about how this, you know, this European Union decision has kind of solidified the European Union as maybe a more alternative to the dollar in times of crisis, which, as you guys know, the Euro Aussie tends to be more of a safe haven currency proxy, trade proxy. So that means as stocks come down, the Euro Aussie will bounce. Okay, I think the bounce could actually be a little bit more aggressive if stocks actually come down in the coming weeks. So that's important to realize. And that was kind of like my cue. I was kind of waiting for a dip closer to 160 to buy some more, because I do think that the Euro Aussie is going to rally. I do think that the stock market's actually going to come under pressure, probably near term. One of the reasons why I believe that is not because I'm looking at the stock market going, wow, it looks really bearish, because it doesn't. Actually, we're still holding up pretty well, and my opinion is we'd have to get all the way back down below 3,200, really 3,180, roughly, to convince me that stocks are actually coming down again. I do think it's going to happen, but that's just an assumption at this point. But one of the things that I pointed out in the chat room, if you missed it, is copper. So copper, let's take a look at it really quick. Copper, let's go to a weekly chart. Hell, we might be able to, I don't think that's going to be correct. Let me see if I can pull it up a different way. Stand by. I'm going to see if I can pull up HGA active contract. Where's my continuous? That's September, generic, rolling 3 month forward. Let me see if I can get, I think it's AGA. HGA is what I'm going to have to pull up, but let me do that again. HGA. It's active contract. Okay, let's see if we can pull up a line chart. Let me see if this will give me historical data, because I don't know if it will. Line chart. Let's try this. Max. 2015. That's only going to go down to 2015. Fudge sickle. Okay. Anyway, let me just. I guess we can look at it this way. The reason why I'm skeptical here, because I don't believe this is the high in 2011. Let's see. Let's go on trading view, see if I can. Copper futures, from month contract, weekly chart. Well, I guess that's gonna give us the best data we've got. Okay, let's go with that. Let's run with that. I guess the bit of a problem here with copper is we are actually, according to this chart, we are slightly above that trend line. But let's go back to that ETN in copper, and let's talk about the daily chart here. So the daily chart, if you take the high from 2018 in June, but this is actually a double top, right? So basically it's the same. to the spike low, we've retraced almost 78% retracement. We're struggling at the $3 mark, which is, you know, the highs from 2019. The daily chart couldn't break above 3. We're coming off today. Relative strength is starting to show some weakness here, right? It's starting to break down a little bit in that divergence. So I think the risk is that copper starts to pull back, equities start to pull back, and then that, you know, that builds the basis for the Euro Aussie to rally. So that's something that, you know, I'm paying pretty close attention to. I've got a, you know, position in the Euro Aussie. I still think that the dollar itself is not going to get too strong. You have to be careful where you're playing dollar strength around. You know, unless there's a major risk-off event. You know, like we went through, the whole United States went to a shutdown. So, you know, obviously that's what created that dollar strength a couple months ago. That's what created this move. But unless we go into a complete lockdown again, which no one's expecting, that would probably create some dollar strength. But until then, or unless that happens, the dollar weakness will probably persist. We might have days that the dollar, you know, bounces, but, you know, overall the trend is, in my opinion, you look at the dollar index, the trend is lower. We have this, you know, bear flag pattern in the dollar index. It's making its way back down towards, you know, 93.5, which is that long-term, you know, weekly, monthly trend line with the dollar index, very similar to the euro dollar, as it comes in towards, you know, 116.5 or 118. So, you know, I expect that the dollar will continue to slide, is basically what I'm saying. Now, what I'm hoping for is that we will get a continued, you know, if equities come down, we're going to see a little bit of a dollar bounce, and that's going to pull back, you know, the euro. So we can get a little bit of, you know, pull back like this in the euro dollar, right? Cable. Aussie, you know, I'm not so interested in the Aussie. I played the Aussie and the Kiwi to the long side the last couple of days, or the Kiwi predominantly, but I was staying away from Aussie for the most part as far as the major goes. But, you know, the Kiwi almost completed that cup and handle pattern, is really close. You could actually almost say that it did complete, you know. Close works with grenades, horseshoes, and technical analysis, right? Okay. Dollar Canadian's coming down towards the 78% retracement. A lot of interest in the chat room that people are looking at the dollar Canadian long down here at 134. I don't think that's a bad idea. And you know, if you want to just eject the dollar out of the equation, which probably is instead of playing the U.S. dollar Canadian, I think the better trade might be the Euro Canadian, right? Because if you look at the Euro Canadian, you know, we broke out of this triangle. We're still holding the breakout point, and if you, like I said, if you're not comfortable with the dollar, look, I'm not comfortable getting long dollars. I'm going to tell you guys that right now. I'm just not. The dollar is breaking down. So, you know, I know some of you guys are out there trying to do it, and that's your prerogative. It's not, I'm not going to say, you know, it's what's right or what's wrong. I'm going to tell you that I'm not interested in fading the dollar right now. That's not to say that I won't. In the first place that I'm going to look, if I do decide to buy dollars, would be against the dollar Canadian, or maybe my better, I think a better selection is the dollar Mexican peso. I'd be more interested in playing the dollar Mexican peso on a break above this this downsloping trend line right here. but we're not there yet. And so therefore, like I said, I'd rather not be long the dollar. So if you want to cut the dollar out of the equation, the Euro Canadian might be a better choice, right? Just some food for thought. All right, and we talked a little bit about the S&P. Oh, Nissim wanted to ask about gold. Look, gold is at the 161% extension, and the daily RSI is overbought. And you know, gold's getting a lot of attention up at these levels. I'd rather be a buyer of gold on a dip down towards 1800. Maybe 1820, maybe below 1800, you know. So here, or maybe down here. That's what I'd be more interested in doing, just getting long on a dip rather than trying to short it. But I think gold will help us kind of identify other things in the market too, like, you know, maybe you know, that dollar bounce a little bit. So there's gold. Silver obviously looks really strong. I thought we were going to stop at the 127% extension. Frankly, it looks like we got to go to 23 first, you know, and then we might get a pullback that looks something like this. But I'll tell you what, this is a very, very bullish breakout, and I would not be what I'm definitely not interested in doing myself is trying to fade that strength. We've had 6 years of a descending channel that we broke out of, and you can see that. I mean, this is massive. That is massive. That right there is a 17% move in 2 days. So I mean, you can try to stand in front of it, but usually when you get a move like that, and you guys have heard me say this before, if there's a you know, a big green bar is usually followed by more big green bars. May not be the first day, you know, might not be here. We might come down for a day or two, but usually when you see that explosive of a move, or what, you know, Ellioticians like to call impulsive, when you find that like impulsive type of move, they're usually followed up by other impulsive moves. So, you know, no need, in my opinion, to stand in front of that. All right, guys, if you are listening to this and you guys are live listening, thank you so much for supporting ForexAnalytix. I appreciate it. For those of you that are, and another thing, for those of you that are listening in and using ForexAnalytix, the live stream is really good to see what the last updates were for, like, you know, basic technical analysis 44 minutes ago. That was my analysis saying, you know, the 78% retracement of the June lows to highs comes in at 1.3398 level, which should offer some support for bulls, and that's for the dollar Canadian. So as we approach there, you kind of know that we're there. But I would use this stream here to kind of see where the latest updates have been published, especially during the trading session. If you miss like the notification that came via mobile or something like that. For those of you that don't use ForexAnalytix, make sure you try it. It's only $1 for 10 days. So you guys, thank you very much. Have a great afternoon, and I'll see you tomorrow morning on the Face webinar. So thanks, everybody. Hey, Martin, welcome back, by the way. Love to see you back. So just really nice to have you back. I know everybody really missed you, and it's glad to have you back. All right, see ya.